And I would like to invite Menno, who is the project lead for Digital Euro at the Dutch Central Bank.
Thank you. Yes, so I can also promise I will not talk about AI. Maybe we can both have that promise. But yeah, Digital Euro. The elephant in the room. This presentation is mainly addressed to all the bankers in the room, whom I know have some serious concerns about the digital euro, and for that I changed the title of the presentation. Normally it says the public money of the future or something like that, but I thought let's just address the issue here, and I added catalyst or a complication. So that's the main storyline I want to give. Maybe just briefly for the people who are less involved into the topic, the digital euro is really about digitalizing cash. So we are into we have the euro now for more than 25 years, and normally I have a little clip here about the news, 1st of January 2002, where we actually introduced the euro in the Netherlands. And since then we've seen that public money, which is the money issued by the central bank, is being less and less used, mainly obviously due to all the different digital payments out there. So we see cash payments falling, we see a lot of contactless card payments, based, in the Netherlands at least, on US card schemes. And what we're trying to do is make Europe more independent by maintaining this public money for the future. That's basically the catchphrase that we use, digitalizing cash. I think you all know about the background here, so I won't talk too much about that. Maybe briefly on where we stand with the project, because recently we've announced some big changes to our project. We came out of the preparation phase part 1, where we mainly did some research, and we've now started the next phase, which somehow we don't really call preparation phase part 2. I don't know what the current phase name is, but at least we started it. We are investing in the digital euro infrastructure, and we're investing quite a lot as Eurosystem, 1.3 billion euros, making the digital euro, as I tend to say, one of the latest unicorns in fintech. And what we're doing in the next 2 years is finalizing the scheme rulebook. So the rulebook will be the set of rules that will govern all transactions in digital euros. We start to develop the digital euro service platform, which is part of the target services that many of the banks probably know from their wholesale payment systems. We will do some pilots, and we will pilot the first use cases in 2027. Not entirely public, but probably inside the national central banks. And we are further preparing for the possible issuance in 2029 at the earliest. And with that is obviously always the caveat that we still wait for the political agreement, and we hope that the legislation will land in the course of 26. So that's where we stand with the project. Now, what we try to do is to keep the philosophy of our current banking system and how we also distribute cash, which is basically keeping the role of the banks similar as of today. So today, if we issue cash, and like I said, cash is the current public money that we have issued by the central bank, the distribution is being done by the private banks. So you cannot come to the head office of DNB anymore. 50 years ago you could, but nowadays you cannot go there and ask for banknotes. What you actually do is you go to your bank and you go to the ATM, and that's where you get your banknotes from your current account. And that's basically also what we want to do with the digital euro. So the digital euro will be through an app or through a physical card issued by the central bank, but distributed by the private banks. And that's basically because we wanted to keep the current roles in the financial system fairly similar to what we have. And we did this also because we thought the banks would be happy with this role because it keeps the banks at the forefront of the client interactions. Now, that's not the latest that I hear, that the banks are happy with the digital euro. So that's obviously a concern that we hear, and that we understand. And this is maybe more a DNB line than a Eurosystem viewpoint, but we understand their concerns, and the concerns are real. And we must take them seriously. So we see that there's some complexity of integration and also the operational requirements that we have by building such a new system. On the other hand, this is also about resilience and not being dependent on only one payment infrastructure, but having different options. And something that is resilient is not always the most efficient. We hear them about possible high investment costs, mainly in integrating all these IT infrastructures. Although we do not see that the infrastructure is as expensive as the banks tell us. So there's a couple of billion euros that's between those different viewpoints. There is obviously an uncertain business case of the digital euro, which has an uncertain impact on another uncertain business case, which is all these private initiatives that we also support as Eurosystem, because ultimately we think the public money system and the private initiative should go hand in hand, and that's obviously something that is still very uncertain how that will play out. And with that, and that's then similar to what I've said, there's this fear of crowding out by public infrastructure, where private infrastructure might have less room to develop and innovate. But I would like to change these concerns and also bring the positive story about what the digital euro could bring, because we truly think that it can also help private initiatives to get up to speed and get more scale. So first of all, we think it can accelerate standardization in Europe, and I don't know if there's a lot of POS or terminal people here, but one of the examples here is that we will probably use the CPay standard at the point of sales, point of interaction. So that will mean that yes, a lot of terminals in Europe will need to be upgraded by also being less dependent on the EMVCo standard, but then using the CPay standard. But by opening up the terminal infrastructure, it would also be opened up for all private initiatives that would bring A2A, account-to-account payment solutions to the POS. We think it can increase interoperability, where our rule book will go much further than what SEPA does today. So SEPA is obviously only bank-to-bank account payments, and our rule book has much more use cases that can also lead banks into more harmonization across countries. Thereby it can enable other initiatives, because they could use our infrastructure in their apps or wherever they would like to use it, accelerating the innovation. Efficiency and lower cost is mainly, if you look at the compensation model of the thing, we will not charge any scheme fees, unlike some of these US companies that we all know that do have quarterly profits of more than a couple of billion every that goes across the pond every quarter. So I do think that would be an attractive use case for banks and private initiatives as well. And obviously the whole idea about the digital euro had to support strategic autonomy, less dependency on non-European players, by giving a more resilient European alternative to all those big techs. And what we already see there is that the digital euro regulation, or at least the push for a digital euro, has also opened up the eyes of the Commission of the dependency on big techs. For instance, when you look at the NFC reader access in iPhones. So my conclusion here, and this is just a brief story because I also would like to open up for questions if I can. So we think digital euro can be a catalyst, but only if we understand and address the mutual concerns. So it's also a call for collaboration with banks and payment providers and PSPs. And I do believe that by working together, we can build this trusted payment ecosystem, and trust was also one of the words mentioned a lot, for and by Europe. Thank you.
Thank you very much, Menno. Now I'm looking around. Are there any questions here?
Was expectable, right?
Exactly.
What do you think, Menno, concerning the report of the European Parliament presented by Mr. Navarrete? I think you expected the question, right?
I expected the question. So what I like, this is my personal view, but I told it also to a journalist last week, so I think it's more or less public soon. My personal view is that at least Navarrete tries to bridge the concerns that the banks have with the Euro system position. So from that perspective, I would support Navarrete's proposal. Obviously, that's a very Dutch viewpoint because we think that offline maybe for the audience, the Navarrete proposal was to first have the offline digital euro and only later, if necessary, also do an online digital euro. It's a bit complex, but that's the core of the proposal. And from a Dutch perspective, that makes sense. But I think from a German perspective, for instance, it's already a completely different story.
I think Mr. Navarrete also said it's not the real offline, it's more a tokenized money construction. Yep. So it's a little bit different to the origin view of ECB.
This whole term offline could better be called self-custody wallets. Yeah.
Anyone else? Yes.
You are saying that you want to use different clearing system than the one already presented. The original idea, as I know, was to use TIPS clearing system to provide or enable the banks to use the leverage they already built with the TIPS clearing system. So the latest information, I know that I'm asking for the bank around, but the latest information you are saying is that this will be different clearing system than the TIPS?
Yes, it will be different from TIPS. And that's because we do not use IBANs. So TIPS is SEPA-based and uses IBANs as the accounts. But we have something called DENS, Digital Euro access number, account number, and that's a different settlement than from TIPS, but we're by the same provider, obviously, also the Euro system. Yeah.
Okay. Keeps me fit.
Introduce yourself as well, please.
I'm Frans van der Lucht, but more from a private interest. How do I have to compare a digital euro against an euro stablecoin, for example? And could it be a competitor, or do you see that they can enrich each other?
So I didn't give the presentation from a consumer perspective, but I understand the question. A digital euro will not be a crypto or stablecoin or DLT-based system. So from that perspective, it's more like your normal debit card transaction than those stablecoins that you mentioned, but with a different account, and the money in that account or on that wallet will be issued directly and guaranteed directly by the ECB. So that's the difference. But they could all be competitors. I mean, we don't know if stablecoins would also be used in retail payment systems. I think we're only at the start of what stablecoins can do. So yes, of course, at some point they could definitely be competitors, but not in the near future. It's my guess.
Any more questions? No? Then thank you once again, Menno.